To sit, Chelsea?
Mm-hmm.
Okay, good.
Hey, hello. Good evening. Welcome. We're coming to you a few minutes, a little bit before we are actually getting officially started for day 3 of our wealth building challenge. So, as you come in, introduce yourself, where you're coming in from, and if you're in the group, if you're in the Facebook group, you won't be able to share this stream because it's a private group. So we will put a link though that you will be able to share. And then we'll let you know when that's posted and you can share the stream. So as you're coming in, please let us know where you're coming from. And also, if you've been joining us the last couple of days, we would love to know any key takeaways, anything you've already implemented. We've been seeing a lot of really awesome videos, posts with your challenge and implementing the things that you're actually learning. What's up, Rick Lawson? How's it going? So it's been really, really, really awesome seeing all of the activities you guys have been doing. And it's like so rewarding to be able to see you implementing in real time, implementing this information to already like strengthen your financial house right now.
Hey, Marlinda, how you doing? Marlinda from Minnesota.
Hello.
Minnesota, I used to say. What's up on Instagram? Hope you guys are doing excellent. So the link in there, I'll put it up on the screen here so you can see it. This is the one. So what you can do is just copy and paste. So copy that link, paste it on your page, and then comment. And then when you come back into this stream, just comment done. So that's how you can actually share a stream to get to more people.
So they have
So
to leave it, though?
the Juno Lucero. What's up? What's up, brother? So yeah. So you gotta hop on there. So take this time to just hop on, share it, post it on your page. That counts as a share, and then just comment done.
Oh, I see.
Inside. Yeah, just comment done inside of here, and then that will allow you to do that. So we appreciate the share, appreciate the love you guys show to us. We have a great episode. It's an episode, man. We got an episode tonight for you guys. We are going to talk about proper protection, why this is fundamental, why this is key to building your financial house. What's up, Rick Lawson? Bill Bonds is from Cali, Florida. Man, did I pronounce that right?
Maybe.
So go ahead.
So you may have noticed that it's not 12 p.m. Eastern. And we got an outpouring of messages from people that this evening time was a better time to be available, to be on the live stream, and we wanted to be able to get as many people live interacting. So if you haven't been able to be with us live the first and second day, there are replays available if you're in our 6 Building Blocks Challenge group. And if you haven't officially signed up for our challenge yet, you still can. You can go to 6buildingblocks.com/challenge, and you'll get all the workbooks. You'll be able to get into our 6 Building Blocks Challenge group, and you'll be able to see the replays of day 1 and day 2. And you can be entered to win some of the cash money prizes that we are giving away. We're giving away $1,000 throughout this challenge. The last day, we're going to have a grand prize winner of $500. So you definitely want to show up, participate, because participation is how you have a better chance of, for one, you have a better chance of winning cash money. And for two, you have a better chance of implementing this information, strengthening your financial house, right? We talk about building an unbreakable financial house so you can live your ideal life. You can handle anything that comes your way financially. You can make the impact that you want to make. And then not just worrying about taking care of yourself, but you can get outside of your family, your business, your community, and make an even bigger impact when you have a truly unbreakable financial house. So
we're sorry.
Participation is key. Take it away.
So we're gonna kick off day 3 right at 7 p.m. Eastern time. So for now, we came on here early just to get people oriented, let them know what to do, what to expect, get things rolling. So yesterday we covered debt debt management and reserves. So we talked about good debt versus bad debt. Some people didn't know that there was a difference. There's a difference between good debt, bad debt. Bad debt would be things you spend for trinkets that don't benefit you financially. And then good debt would be debt that you use to buy assets. So, for example, real estate would be an example of good debt. So, if I buy a real estate property and it's paying me cash flow, that would be an example of good debt. So, if you like our content, please like it when we're talking. Give us some hearts or some thumbs up or things, those kinds of things. That allows more people. It allows it to be shown to more people, and more people can participate and benefit from the information that we have to share with you guys today.
And if you were on our live stream day 2 yesterday, put in the comments something that you learned having to do with debt management or reserves. What did you learn about good debt and bad debt? What is something that you implemented? I know some people already went and opened a new bank account to start their reserves account. We talked about having a completely separate account and building up your reserves. So we saw people actually went yesterday and opened accounts and started funding their reserves. So when we talk about participating and speed of results, creating your results now, this is not something that you just take some notes and then like put in a drawer and think, oh, that's nice, or you may have learned some new information. No, these are things that if you follow each area that we talk about in the 6 building blocks to your financial house, you absolutely will strengthen your financial house and you'll be on your way to building an unbreakable financial house. So be thinking of where you are now in all of the things that we're talking about and what steps you can take. Like, what's the next step you can take to strengthen your financial house? Always be thinking about, when making financial decisions, am I putting myself in a stronger financial position or am I putting myself at financial risk? Okay, so be thinking about that.
So on here, so one of the things, one housekeeping things, one of the reasons we'll go early, just to kind of do some housekeeping stuff. See on the screen where it says, Facebook user, whoever made this comment, I made a plan less than my bad debt. So that means we use a service called StreamYard to stream onto Facebook, so we can show stuff on the screen and all that kind of stuff. So Rain's going to drop a link in the comments, and you can just click on that link, and you can authorize StreamYard to do that way we can see who you are. So that way we know it doesn't just say Facebook user, because you can see yourself, but we can't see who it is. So that way you authorize StreamYard to allow you to comment on here.
I have a question. If you did it before, is it good, or do you have to do it every time?
I don't think you have to do it every time, but sometimes people have had to do it again. So just go and do it again. Nathan says, open a separate savings account for myself, my business. Nice. I only had a business checking. Yeah, so he took some steps to be able to do that. It's important to have separations between your assets, different checking, different savings account. You can have a business checking, business savings account that you use for different purposes. And the more you keep your money separated with different accounts, we have accounts we have different bank accounts with different banks. Part of the reason we do that is let's say one of my bank accounts ever got compromised, for example. Well, do you want somebody having access to all your money, or do you want you want to have some barriers and layers in place so that you don't have a situation like that?
Also, if you have money in bank accounts, as you grow your reserves and you increase your income, you want to also be aware that banks only insure your money up to $250,000. So if you have more than $250,000 sitting in a bank, first of all, there's much better places to put it. But second of all, it's not fully insured if something happens to that bank. So that's also another good reason to have different bank accounts.
Yeah, and so you have that also. Look, if you're in an emergency, look, I grew up in a war zone in West Africa, in Liberia, West Africa. I talk about that a lot. And look, when a war is happening, sometimes you're trying to get out, and an emergency situation is going on. You got to figure out what's the best way to get out. And what if you have your money in one bank, and for some reason that bank's down, you can't get access to your money, but you need money. It's fine to have money in a different bank. It doesn't even have to be a huge amount of money, but putting your money separate with different purposes for it is actually you being in control of the money. It's like you're an air traffic controller of your money. You're telling your money where to go, and that's you being in control. That cause when it comes to your money and finances.
Yes. And it's also okay to have some cash in your safe along with your weapons if you ever have to make a quick run for it.
It's perfectly okay to have some cash in your safe.
You know,
with your
gotta
firearms.
be prepared.
if you're into firearms, Chelsea and I are into firearms, so we have our
and proper safety.
Proper safety. That's one of the things that we learned using firearms.
It's all about education. I used to have a fear of them actually, and then we went and got our son trained, and then now I don't have as much of a fear around them because I know how to handle them, I know how to keep them safe, and I know our family does as well.
Yeah, you want to be able to defend yourself and your family because look, the reality is you can fist fight all you want, but if the guy shows up with a gun, how you gonna fist fight a gun? You gotta respond with the same level of threat as the guy's coming at you with. And also it can be a deterrent. So Chelsea knows how to use it, and I know how to use it, even our son knows how to use it from a safety point of view. So it's not a discussion about guns. It's just one of our little hobbies. But yeah, she does keep some cash in your safe with some guns, some ammo. This is America, baby. That's one of the rights you got in America. Okay?
Talk about inflation. Boy, that's one thing that's going up.
All right, so we're about to get started here in a minute or two. We told you, we promised you that we'll get started right at 7. We came on a little bit earlier just to do a recap, give you some housekeeping items. When you share that link that Ring posted, just go ahead and comment done. Like you just copy and post it on your page. That's a way to share it. So great to see all you guys on here. Hey Jamie. Hey Kamisha, welcome. Great to see you guys. What's up, Jesse Smallwood on Instagram? Great to see you guys here. So why don't we kick it off with, as you guys see, she always got a bunch of alarms on her phone.
I do. I'm just making sure that I don't have any more going off. Okay, I think we're good.
Why don't you kick it off?
All right. So welcome to the official day 3 of our Wealth Building Challenge. Today we're talking about building block number 4, build proper protection. Using proper protection to build wealth. So remember that we are, in this whole challenge, we're talking about building an unbreakable financial house, and we're going through the 6 building blocks that make up your financial house. We've talked about cash flow. We've talked about reserves. We've talked about cash flow. We've talked about debt management. We've talked about reserves. And now we are going to talk about proper protection. So I want to tell you, I'm going to remind you of what we are delivering to you in this wealth building challenge. It's a clear understanding of what an unbreakable financial house is and a know-how to build it. Okay. And then today, talking about proper protection, what we're delivering to you is a clear understanding of the exact tools you need in place to protect the strength of your financial house and future generations. But before we get into that, we're going to start off with a winner because we're giving away cash giveaways throughout this whole challenge. And we have a $50 winner right now that we're going to announce. And then at the end, we're going to also announce another $50 winner. So who is going to be the winner tonight? This goes for participation. Okay, so this one is specifically for doing the challenge, the homework from last night. This particular person went above and beyond. We talked about exchange, right? How much you exchange value with someone and how that affects in your life, your success, your finances. And so this person, you want to go and check out what she posted, the work and effort and creativity she put into her homework and her posting. And without further ado, today's winner, the first winner for $50 is LaKendra Fulbright. Woo! Congratulations, LaKendra, $50 coming your way after the stream. Message us so we can get that to you. And you guys, check out LaKendra's posts. Check out her homework and the effort and creativity that she put into it. It's really, really awesome and amazing. And I love seeing all your guys' videos and your posting and seeing like your financial goals and the things you're putting in place. It's really, really awesome. And that is so rewarding for us to see that we're providing value that you're implementing. So thank you so much. Okay, so as we get into proper protection.
Yay, that's me. Is that you, LaKendra? So if that's you, click on that link. streamyard.com/Facebook. And that will allow us to be able to see your name and your image whenever you comment on there. So congratulations to you.
Yes, awesome. Okay, so if you have your worksheet, pull out your worksheet today. If you didn't get a worksheet, you can still take notes. Be sure that you take notes, okay? So get something to write down, but if you have your worksheet, pull that sucker out right now because we're getting started. Okay, so proper protection defined. There's 2 definitions here. You're going to fill in the blank. And we always talk about definitions because we want to make sure all of the words and terminology that we use, we want to make sure that we fully understand it so that we know how to properly implement it. Okay, so the first one, this is protection defined. Number 1 is to cover or shield from exposure, injury, or loss. Okay, to cover or shield from exposure, injury, or loss. And Rain, maybe you can type that also in the comment, to cover or shield from exposure, injury, or loss. And number 2 definition is to maintain the status or integrity through financial, legal guarantees. Okay, so these definitions are a little bit wordy, but we're going to get into the meat and potatoes and you'll see why it's important that we're going over the definitions. Okay, so the second definition is to maintain the status or integrity through financial, legal guarantees. Okay, so what types of protection are there and what types of protection are we talking about? There's many different types of protection in life, right? There's sports protection for sports, like football players. They've got the protection, you know, that they wear their pads.
Here's a fun fact about that, by the way. So apparently, you know, the players wear something called a cup that protects their nether regions. And apparently that was invented before the helmet for the head or something like that. So they realized later on in life that the head up here was also important to protect. There you go.
Well, okay, so talking about that, I mean, there's also condoms as protection, right?
Yeah, utilize those.
And in the last year or so, we've all learned about protective gear protection, where wherever you go, and they've got the plastic shield, and they've got the masks, and all of these different protective wear, right? So there's many different types of protection. There's also health insurance. There's life insurance. Specifically, when it comes to protection tonight, we are talking about life insurance, which is actually the next blank in your notes, okay? Life insurance makes up the foundation of any financial plan. There is so many important uses for life insurance, and we're going to get into it tonight, okay? So life insurance makes up the foundation of any financial plan. Now, let me tell you really quickly what some people say about life insurance, because there's a lot of different views or beliefs or confusion about life insurance. So some people say the price, it's ridiculous. Okay, and we're going to address all of these things too. Some people say the risk that the company providing the death benefit goes out of business. That's a fear that some people have. Some people have a fear that they don't have enough life insurance. They're afraid of the dying part. Some people, someone said that I have too much and my wife will buy too many convertibles. Okay, and these are all real concerns that people have when it comes to life insurance. Another one that somebody says it's only for rich people. Someone else said, and other people say, don't know how much or what type that I need. Some people just don't understand how it works. And some people are afraid that they can't even get approved because they have pre-existing health conditions and they think they just can't even get it. So when it comes to life insurance, we're going to do kind of like a life insurance 101. We're going to talk about the uses, the importance of it, and how you can implement it, and how it really ties into strengthening your financial house. We talked about reserves, how they can ensure the financial survival of your family, your personal finances, your business, and life insurance is another piece of that. And it is such a key foundational piece of your financial house. So we're going to get into that.
Yeah, and before she gets into that, let me set this up properly so you guys have further context.
Oh, because I didn't already set it
No,
up
no,
properly?
you did a good job.
Go
You did a good
ahead.
job setting it up.
Go ahead.
But I want people to understand that we used to go to the seminar where they used to say the three most dangerous words in English language was what?
I know it. I was going to say more words. Yeah. I know that.
I know that. So a lot of times when people hear about concepts and it sounds familiar to them, they'll say, oh, I know that. And they don't listen as well. So I'm setting this up for you because life insurance as a financial tool, as an asset, can be used in so many different ways. We're going to talk about some of that tonight. How it can be used is one of the biggest breaks in the tax code. Number one, it's one of the greatest and most efficient ways to pass on generational wealth. It's one thing everybody says, generational wealth is a buzzword, but very few people can tell you how exactly to execute on that. It just sounds cool, but how exactly do you execute on that? We're going to start talking about that tonight. How to create tax-free income, how life insurance can create tax-free income for you, how you can use life insurance to buy real estate while you're living, how you can use life insurance to buy crypto, all you other people in crypto, like digital currencies, all that, how you can leverage life insurance to buy crypto, all of those kinds of things we'll talk about some of that tonight with the different types of life insurance so that you're not stuck on the I know that, or you already know something, or don't know what you don't know. So there's many different layers on how you use this as a tool. And I'll talk about how some of the people who are running your government and running this planet use it to their benefit. Okay, so stay tuned throughout the whole thing and make sure you're taking your notes so you have a really, really good understanding of how this is used as a tool and how you can actually use it to accelerate your wealth.
Okay, so I can speak now?
Go ahead. Sarah.
Okay, thanks. All right, so there's basically two main types of life insurance, okay? There's term life insurance and there's permanent life insurance. I'm going to tell you what term life insurance is pretty quickly, and then Martin is going to take it away with his expertise into permanent life insurance and the amazing many uses for it, okay? And also, let me tell you this. If you come across somebody that tells you term life insurance is bad, or term life insurance is the only good one, or permanent life insurance is bad, or permanent life insurance is the only one you should have, let me tell you, just like I said before, if somebody talks in absolutes of you should never do this or you should only do this, it either means A, they can only offer the thing you're telling you and they can't offer you the thing that they're telling you not to, or B, they don't fully understand it. So you got to always look at where is the information coming from, what is their motive, and then what's the right move for me? What's the right decision, okay? So we don't say that any one insurance is the best or the worst, okay? They're used for different things. So term life insurance is the least expensive life insurance. All life insurance is a contract with a life insurance company. So when people have a fear or think like, oh, they don't pay out, it's a contract. They have to pay out for what they're contracted to pay out. Okay, the contract for a term policy is usually 10 years, between 10 years and 30 years. So you can get it like 10 years, 15, 20, blah, blah, blah. Generally up to 30 years. Okay, and the death benefit, like when somebody dies and the money goes to your beneficiary, that's who you say, I want the life insurance money to go to this person or these people. They receive that money tax-free. They don't have to pay any taxes on it, okay? And I'll tell you, when it comes to term life insurance, it used to be that you had to die for it to pay out, okay? Now, there's newer benefits, newer policies. Only a couple of companies offer this, but this is going to be your next blank on your worksheet. Now, there was under two kinds. It says one, that's term. That's where you write down the notes about, the term is the least expensive. It's a contract with a life insurance company. It lasts between 10 to 30 years, and it pays the beneficiaries tax-free. Now, under that, it says, this kind should always have blank, okay? This kind should always have living benefits. Living benefits, it allows you to get paid money from your life insurance while you're still alive. This is on a term policy. If you got critically or chronically hurt or sick. Most people are familiar with, like, if you get a terminal illness and the life insurance pays you early. This is if you got something like, let's say you had a heart attack or cancer or even arthritis. There are one of the companies, the top claim that they have that they pay out is women with arthritis. You don't die from arthritis, but it definitely can affect your daily activities. It could affect your ability to dress yourself or feed yourself or type on a computer, work. So those are things where you can actually receive money, and it can help you pay your medical expenses. It can help you pay your living expenses. Maybe you need to get some help, with some of those daily activities. So this is key, vitally crucial to know, because a lot of people don't know about this benefit. A lot of even insurance people don't even know about this benefit, and it is vital to have. So this kind term should always have living benefits. Okay, and let me tell you a little story. There's a guy named Dave who had not one, but 2 heart attacks, and he survived. And Dave has a farm. And when he had those heart attacks, he couldn't run his farm. But he had a policy with living benefits, and it was able to pay out and help him keep his farm, keep things running, cover his medical expenses. And then guess what? He still had, he received $272,000 while he was alive to help cover medical expenses, to help keep his farm running, whatever he needed to do. And he still had money left over on his policy, so that when he passes away, he could still leave $500,000 to his family. So this is vital to know this information, because this is really the difference between when you hear the saying, the rich get richer and the poor get poorer, right? A lot of lower income families, they don't have life insurance. So when somebody passes away, they get poorer because the income earner is no longer there, and they have to scrape together the money to bury the person, and then they lose that income and they're worse off. But a lot of wealthy people and families, they have lots of life insurance. So when someone passes away or even gets sick, they get richer because they have a lot of life insurance. So I'll tell you really quickly what some of the risks are of not having life insurance. One is not having it, because we don't like to think about people dying or getting sick, but it's a whole lot easier to think about it before it happens. Because if you wait until it happens, it's sometimes too late, unfortunately. And this is about putting yourself in a stronger financial position. So it's about looking at what financial risks that you could be facing and how to protect yourself from them. So one risk is not having it. Another risk is letting it lapse. That means letting it cancel, and then you don't have it anymore. Another risk is not having living benefits, right? Because if something happens and you can't get that money, a lot of people don't think about, if somebody gets cancer, they don't think about the partner not going to work because they're caring for their partner, right? Or the work that you miss. Or even if you think, oh, I have it through my job, that's another risk, only having it through work. Because if you get sick and you lose your job, you lose your health benefits. Or if you leave your job. And so if you only have it through work, then it's really a good idea to get a policy outside of work so that you have that coverage whether you're at that job or not. Because if you wait till you leave, your health might be different, your age might be different, and those things affect the cost of life insurance. And another risk is not having enough, because you wouldn't want to go through all of these steps and planning for your family and planning for your business just to find out that it's not enough. So we encourage people we always recommend get as much as you can, because you never know. Just like with reserves, you want to build your reserves up as much as you can, because unexpected things are unexpected. You don't know what you don't know. You don't know what's going to happen or what you're going to need. And then here are some of the uses of life insurance, especially term insurance as well, is it can replace your income. Like if you got hurt or sick or passed away, it can help to replace your income. It can pay debts. Like if somebody passed away and there's a bunch of debt, left behind. Well, life insurance can help cover those. It can help cover medical costs. As we talked about on day one, medical expenses are the number one cause of bankruptcy.
Yeah.
So this is something that can ensure the financial survivability. Ensure the financial survival of your family, your business, and also end of life experiences. Someone may not think about if they unfortunately get a terminal illness, is instead of being sick and sad, what kind of experiences would you want to create? Maybe you want to go on a worldwide tour with your family, or whatever that you want to do. Life insurance is something that can help you do that, and it can also help you create generational wealth. Okay, like Martin said, that's a buzzword. Everyone talks about generational wealth, leaving a legacy. This is how you actually do it. And you can do it for so much less than you can actually create and leave behind. So the lesson in this is don't wait until it's too late. One of the things that people said about life insurance is they thought it was too expensive, but people actually estimate what they think life insurance is going to cost, and they estimate like 3 to 4 times more than it actually is. So when we talk about increasing your knowledge, take more responsibility, have more control, you want to increase your knowledge so you know what's available, what's out there, what does it cost. Take responsibility by making a decision to put this in place for your family and your business, and have more control over the unknown and creating generational wealth.
Thanks for all the hearts and likes, guys. All those thumbs up and the hearts. We really like that, because also it allows Facebook to show it to more people, because they're like, hey, they're liking this content. So anytime you guys send us some hearts and all that, that's awesome for us. So,
and before you go on, I want to ask you a question. We could just go on and it'll go in the comments. But so I want to ask you guys, based on what I just said about term life insurance, besides the death benefit, what is the most important benefit on a term policy? So we just talked about it, and I want to see who's paying attention. What is the most important benefit on a term policy besides the death benefit? So put it in the comments, and then Martin is going to tell you all about permanent life insurance. And you guys want to listen to this, because this is like the this is how life insurance is actually fun and even sexy. Okay.
Sexy life insurance,
sexy.
Baby.
Bringing sexy back to life insurance.
So look.
Yeah, you guys got it.
Yeah.
Woo-hoo.
You guys are smart. Living benefits.
Living benefits.
Awesome. So look, it's life insurance is an interesting tool, because there's lots of different things that can happen to you in your journey of life, right? So lots of different things that can happen to you. Number one thing you got to do is, first of all, recognize that you are your greatest asset. Every time we ask people, what's your biggest asset? Oh, their house, their retirement account. That's the things they say. Very rarely do they say, me, I'm the biggest asset. I am my biggest asset. So here's the thing about it. Your biggest asset is you. Who created the retirement account? Who created the bank account? Who created whatever, any dollar you have, you went out and you did something to collect that dollar. We talked about that on day one on cash flow, right? So if you are your greatest asset, does it not make sense for you to understand how to secure your greatest asset, protect yourself, and then from there, build from there? So you have a few different risks when you're navigating life and you're looking to build wealth and all those different things. Is that one, you have a risk level of you passing away too soon. So if you pass away too soon, then how does your plan keep being completed, right? How does my plan complete if I die too soon? Well, life insurance steps in to complete your plan. However, what if I live a long time? Because that's the goal. The goal, right, is to live a long time. You go and you work out, you eat healthy, you do all the stuff you're supposed to do. Then you're supposed to live a long time. So if I'm living a long time, how do I use this tool to my benefit? So that's one of the things I want to talk about here right now. How to utilize this as a financial part of your overall financial strategy, so that you can hit the targets you need to hit with this as a tool. So life insurance as a vehicle. So we probably want to turn the air down a bit. if that overheats the thing. So, so all right. So let's get into that part. Number two, permanent life insurance. So permanent life insurance, so term life insurance means it covers you for a period of time. Permanent life insurance means it covers you for your entire lifetime. So there's some that will go until you're 100 years old. There's some that will go until you're 120 years old. So statistically, you're not going to outlive it. It's meant to be there in place when you pass away, so then it pays out a death benefit to your beneficiaries. However, there's also another feature of permanent life insurance that's called a cash value component. So cash value inside of life insurance, think of it like a savings vehicle within your life insurance policy. So first of all, why would anyone use a life insurance policy as a savings vehicle? Why would anybody do that when they have when your savings accounts are available? Well, for one, a couple of different reasons. One, you have the ability to earn a higher interest rate, typically earn a higher interest rate inside of a life insurance policy than you would in a regular savings account. So in your savings account, you're earning less than 1%. Well, have you seen the cost of goods and services going up? That's called inflation. So if certain good prices go up and your money's earning less than inflation, your money's losing value, dude. So your money's losing value. How do you figure out how to make up that difference? So life insurance policies, permanent life insurance policies that have a cash building component earn a higher interest rate than a savings account would. Now, the second thing is there's a feature we'll talk about a lot tomorrow called compound interest. Here's what compound interest means. Every year that my money earns interest, and that interest the next year goes to earn me more interest. And then the next year, the year after that goes to earn me more interest. And it builds on top of itself. Think of it like a snowball, right? It may start off small and it gets bigger and bigger and bigger. Your money can do the same thing. It starts off and it gets bigger and bigger and bigger. So you can create effectively a money snowball, and your wealth can start to get bigger and bigger. Now, with life insurance policy, it allows your money to compound inside of your life insurance policy. And most of these types of policies, you don't suffer a loss. So your money's not at risk from losses, right? And then within inside of your cash value, there are a couple of ways you can access it. Number one, you can withdraw it. So you can say, I put money into this policy, I'm going to withdraw some of this money out. So you can withdraw it just like you withdraw money from a bank account. You can say, hey, I'd like to withdraw this money. Or you could take a loan against it. So now why would anybody want to take a loan against money? So yesterday we talked about everything in our challenge is building on top of itself. All these building blocks build on top of itself. Why would somebody have money and borrow money? See, when you don't understand the difference between good debt and bad debt, you don't understand why wealthy people borrow money. Elon Musk went on Twitter the other day and he said, I don't have any income. I don't have any income. Well, do you think Elon Musk lives in a nice house and drives a nice Tesla or whatever? How does this guy pay for his life if he doesn't have any income? He says, I don't take income. I don't have any bonuses, nothing. So do you think he's living on the street? He's the richest man in the world. He's not living on the street. So where does his money come from?
Spaceship.
Okay. So where does his money come from? You understand? Elon takes loans against his assets. Elon takes loans against Tesla stock. You understand? Why does the richest guy in the world borrow money? I want you to understand. You got to understand the rules of the game you're playing. If you don't understand the rules of the game you're playing in this country, on this planet, you will get so far behind because you don't know the rules. The other people aren't playing by the same rules you are. So people told you that borrowing money is bad because they didn't explain to you the difference between bad debt and good debt. Okay. If they don't explain that to you, you don't understand why Jay-Z and Beyonce have a mortgage, why Warren Buffett on his second home had a mortgage, why a billionaire on this app, Facebook, Zuckerberg. Why does Zuckerberg refinance his house, his $6 million house, go through the trouble of refinancing a property, even though he can pay for it easily with cash? Why would he go through the trouble of borrowing money to do all of that? Because when you have an asset that is growing, it's appreciating, and you can leverage it, you can borrow against it to buy other assets or do other things with it, to a lot of people, that makes financial sense. So they're like, I don't want to interrupt my money compounding. I want to leverage it to buy other assets. So you can do the same things out of a life insurance policy. So to get clarity, we're talking about permanent life insurance policy here, where your money is compounding inside of the policy. and then you can leverage it. You can have it working in one location, and you can borrow against it, and you can put that in the second location. So, for example, let's say I've been funding my life insurance policy, money's building up in there, and let's say I want to buy real estate, right? I want to buy a real estate deal. So, but I don't want to stop my money from compounding. I want my money to keep compounding. So how do I buy the real estate and keep my money compounding at the same time? Well, I simply go and take a loan against the cash inside of my life insurance policy. I take that and I go buy the real estate. The real estate still cash flows because I have tenants in there that's going to be paying down the debt. So you have tenants that are living in there paying rent every month, and that cash flows to me, and I still have my life insurance policy. So if I die, guess what? My family still keeps the real estate, and they get paid a tax-free multi-million-dollar life insurance policy. Do you see how I can use one asset and leverage it to buy multiple assets? So all of these are financial tools. You have to understand what you're trying to do and what these financial tools can help you to do. So there's a lot of people who have permanent life insurance policies. A lot of their permanent life insurance policies are designed incorrectly. They're not designed properly. What I mean by that is they either don't understand how it should be properly designed if they're trying to build cash, or they have not been properly explained how to use these strategies to benefit them. So for example, we have one of these in place for our son, right? So one of them in place for our son, and the goal is when he's in his 20s, I'm guessing he may want to start doing something with his life. Yeah, I mean, he does stuff with his life now. He's like had his own business. During the summer, he worked in our office, and now he has a job. He has a job where he works at a restaurant. But in his 20s, he might want to do something. He might want to do some stuff. And so,
could you do something with your life?
Do something with your life, man. So we set up a plan like this because when he's in his 20s, he can leverage his policy to buy real estate. Now, how many of you would have liked that whether you're in your 20s now or you used to be in your 20s, whenever that was, that you had an asset that was available to you in your 20s that could give you the capital to buy your first home? So we can set something up like that. We set that up for him. So when he's in his 20s, he can go buy his first home. He could go flip a property. What if that was the capital he needed to get started in real estate, and he became a real estate investor for the rest of his life? Or whatever that is. It doesn't matter. Maybe he wants to start a business and he needs capital to start his business. How many people struggle to have capital to start their businesses? And they don't start the business because they don't have capital. Understand there is a different game that people are playing over here. The guy who started Amazon, Jeff Bezos, one of the richest people in the world, where did he get his capital from? His parents. You get it? So understand, this is how some of these people are playing the game. Some of these people have parents that's giving them money. So you don't have to be wealthy to set up these plans. But if your grandparents and parents didn't set up these things for you, you can set them up for yourself and for your children. But it starts with you having the level, the understanding, some knowledge about the subject for you to even know it exists, how it works, before you can even make a decision if something's right for you and how you use it. So when you understand the different tools that's available, then you can start building from there. This is a vital tool. And so let me give you a sense of this too, by the way. And I try, I don't get political. I try not to stay away from politics here in America, because people get very emotional and illogical when it comes to the subject of politics. However, the current president of the United States owns six of these policies. He's been borrowing against his life insurance policy since the 80s. Okay, I did a whole webinar. Matter of fact, in 2 weeks, we're going to do a webinar where I dive deeper into this subject so you can understand how you can become your own bank, how you can actually build up your assets, leverage it to buy other things. You can leverage it to buy real estate, leverage a life insurance policy to buy crypto. Once you understand that space, I'm doing a big study on crypto, talking to guys who have made millions doing it, and who have a strategic plan and how to execute on it. Those are things we're working on doing. And also how you can leverage that to then do multifamily real estate. All these are different things All these are different things that you can utilize to be able to grow your wealth. At the end of the day, you have to figure out how you're going to become financially free. Okay? The government's not going to do it for you. The mommy and daddy's not going to do it for you. Nobody's going to come do it for you. It's up to you to get the correct knowledge. Talk to people who have some knowledge on the subject that can help you, who have some experience, who have some results that can help you. When I came to America, I didn't know anything about this stuff. Right? I felt like I was behind everybody because I came from a foreign country. I didn't know your economic system, your financial system. I didn't know about credit cards, how credit cards worked. I was so scared to get a loan because I thought if I don't pay people back, they're going to throw me in jail or throw me out of the country. So I never wanted to take any loans in America. That was my level of understanding when I first got. I was so scared of everything, and then nobody could help me with the right answers. So how are we on time for these pieces?
We're good.
Okay, so we're talking about, Chelsea talked about term life insurance. I'm talking about permanent life insurance. Now, here's another factor on with permanent life insurance. One, permanent life insurance costs more than term. Okay, it costs more than term because you got to look at from your point of view and from an insurance company's point of view. Which, if you're an insurance company, which are you more likely to pay on? A policy that covering somebody for 30 years, or a policy that's going to cover them for the rest of their life? One you may or may not pay on because the person might live longer than that period. The other one, everybody's guaranteed to die, so you're going to have to pay on that one. So they charge more for that risk because statistically, if you have a permanent life insurance policy, it is going to be there for the rest of your life. So they charge more for that risk. That's all it is. So term policies cost less. I own both. I own millions in term and permanent life insurance for a number of different reasons. For one, my term policy has no cash value in it. So there's none of my money in there besides the monthly amount I send every month for the insurance company to provide me that coverage. However, if I get critically or chronically sick, it can pay me up to $1 million while I'm still living. And I don't have to pay that money back. So if I get diagnosed with cancer or form of cancer diagnosis, that can trigger a payment to me while I'm still living, up to $1 million without paying taxes on it. All right, so that's there in case that happens. My father supposedly had cancer. All right, so he was in Africa at the time when he passed away.
We're getting close if you want enough time to.
What's that?
This part here, if you want enough time.
Okay, all right.
To cover it.
Yeah. So look, that's part of my piece, right? Okay.
Yeah, and then you want to just probably give them these lists here so they can fill in their workbooks. Number 2, perm.
Okay.
A few things that they can fill
in. So
in.
my father-in-law is on here. Hey, Kirk, how you doing?
Hey, Dad.
So we're talking about all these different things on. We're talking about life insurance.
Everyone, say hello to my dad. Welcome. He's a big part of why I'm so awesome.
Yes. There you go.
He's an awesome dad.
And I talked to Chelsea's dad
Mr. Kurt Reese.
before we got married. I went and I asked his permission. So you guys out there, that's a good thing to do. And Chelsea and I have our anniversary coming up.
We do.
We have our wedding anniversary coming up here.
It's like 100 years.
I don't look that old. Dang, woman. All right. So look. So for some of the blanks there that we talked about, you can fill in. Permanent life insurance lasts your entire lifetime. It pays to your beneficiaries tax-free. So no matter how large of the benefit is, it's going to pay to them income tax-free. You can leave a $50 million life insurance policy to your family. There won't be income taxes on there. Sometimes depending on the size of your estate, if you're worth about a certain amount, which we'll talk tomorrow, we'll talk about estate taxes and how life insurance can help handle estate taxes. We'll talk about that on Friday. But permanent life insurance lasts your entire lifetime, pays tax-free. You can design it to build cash and accumulate cash. You can leverage that cash for other assets. You can use it to buy businesses. You can use it to buy real estate. You can use it to buy cryptocurrency, whatever you want to use those funds for. You can use it for that. So we talked about those things. And look, life insurance is not an investment. So a lot of times people tell you, oh, don't invest in life insurance, or life insurance is not an investment. It's absolutely correct. Life insurance is not an investment. It is life insurance. It's not an investment. It is, the way to think about it is a place you store money. You're storing money in there because think of it like a comparison to a bank account. I'm going to store some of my capital in here because I can get compound interest. I can generally earn a higher interest rate than a bank account, and I can leverage it to buy other assets. Simple. It's not super complicated. It's been around for thousands of years. A lot of wealthy people own it, including the president of the United States. Okay, all these people own it. All these guys own big, huge life insurance policies. Rich people own a lot of life insurance policies. So you can use it. Another way you can use it to, so on the second page here, it says ways you can use it. Ways you can use it on the other page. So you can use it to become your own bank where I can store money inside of my life insurance policy and leverage it for assets. And I want you to understand that we're going to do a webinar on this, how to become your own bank. When it's done in 2 weeks, we'll send you guys out some information about it so you can understand how to use this as a strategy to do that. You can use it to buy real estate or other assets. You can also use it to create a tax-free retirement. Let me give you an example of this, by the way. This is one of the ones that we use. Has a phenomenal tax-free retirement tool because ultimately, what is retirement all about? Your retirement account. The purpose of any retirement account is to produce cash flow. That's the purpose of it. It's not to look pretty. It's not to be with this company or that company. All of that is secondary. How much cash flow is this account going to produce for me when I retire? That's the most senior information to look at on it. So if cash flow is important, I want to look at how can I maximize my cash flow. So life insurance is actually one of the tools we use, can actually pay you lifetime income, give you income for the rest of your life. And some of the policies we use, their lifetime income is so high, it can produce sometimes twice as much cash flow to you from the same amount of money as you would if you just had a traditional account. Because there's a certain amount of income it's recommended to take from a traditional account that certain life insurance policies, certain features on some of these policies can actually produce a lot more cash flow than just that. So you can use it for tax-free income. You can use it to fund a trust. A trust typically is a legal document, legal structure where assets are held for the benefit of someone else. So let's say you have a minor child. You may not want to leave them a lot of money when they're 8 years old because they can't inherit money at 8 years old. So you can set up a trust and then you can have money go into the trust for the benefit of your children. So let's say you may not have a lot of assets today, but you want to make sure your kids are taken care of, but they're minors. So you can actually set up a trust. We're going to talk about trusts on Friday, different types of trusts on Friday. It's going to blow your mind. And you can have life insurance, fund your trust. And now, even if you don't have a lot of assets today, you can set them up to have generational wealth. That's part of how you do it, is you set up a trust, you can have life insurance, fund your trust. Now you can have $1 million set aside for your kids while paying a tiny fraction of that every month to ensure that happens. So that's another way you can use it. Generational wealth, you can use it to transfer wealth to future generations. All of those are different things you can use. So here's some of the risks. The risks you face. One, on permanent life insurance. What are the risks on permanent life insurance? Number one, not having it, because you could get to a point where we call uninsurable. Uninsurable means that you can't get life insurance anymore, man. Your health is going bad. Nobody wants to give you life insurance because you're too risky. So, or you just had a DUI last month. They're like, dude, you just had a DUI, dude. Most life insurance companies don't want to insure you after you had a DUI. Right? So they look at all kinds of stuff because they look at pattern of behavior to cover the risk of something happening to you. The second risk is you letting it lapse. You had it and then you let it go. Dude, that's not good when people look at that, because what do they look at is what is your behavior. Insurance looks at your behavior. Just like your credit, we talked about credit the other day. Credit looks at your financial behavior. Insurance looks at what your risk behavior is. Do you drink and drive? Do you have a suspended driver's license? Do you engage in dangerous activities? All of those. Do you have a dangerous career? Do you get a policy and lapse the policy? All of that, to look at your behavior. And to look at that, and like sometimes they get to a point where like, hey, we don't want to take that risk. We don't want to take on this person. And so they won't. Sometimes they won't insure you. So something to keep in mind. Another major risk of the policy is not being designed properly. I think a huge amount of life insurance policies for cash are not designed properly. They're not designed or funded properly, set up the right way to where you can use it in this fashion I'm talking about. Most of them are not. Most people have a very basic type of life insurance policy that covers if they die, maybe they got a little whole life policy that's there, but it's not being maximized. It's like you got a Bugatti and you don't know it goes faster than 10 miles an hour. And it's like, oh dang, this Bugatti goes more than 10 miles an hour, but you got a Bugatti and you're like driving 10 miles an hour like a 90-year-old lady. So don't be a 90-year-old lady driving a Bugatti, because I bet you.
Be a lady.
Because men don't live to be 90 years old. The wives kill them off. What? I'm just kidding.
Oh my God, that's another myth. Fear. That's another fear that people talk about.
Yeah, they think
if you're afraid of your spouse killing you if you get life insurance, let me tell you, you got bigger problems than the life insurance.
You got bigger problems, okay?
You got to confront some stuff.
Don't worry. Look, if you married a killer, you should know.
You shouldn't be married to someone you're afraid.
How can you be that dumb to know you married a killer? Did you marry somebody who just randomly decides to kill you one day? That's weird, guys. Don't put those weird thoughts in your mind, because look, you marry somebody and all of a sudden you think they're going to kill you. What did you do? Are you doing something you think they're going to kill you over? Are you cheating on her? That's why you think she's going to kill you? So don't put those weird considerations in your mind because you watch something late night on television. Television is made for drama, right? They don't show, like, the people got married, they lived together, they had a nice family, they were married for 30 years, 40 years, and when he passed away, she inherited millions of dollars, and then now she's like helping her kids and grandkids. That doesn't make a dramatic movie.
What was that show?
Hallmark is not going to make a movie about that. They're going to make the most dramatic type thing that ever happened. Okay, so don't buy into all these crazy ideas. So the other risk of it is not funding it properly. Not funding it properly. If you have a life insurance policy, you can design it to where it can be flexible, but you have to fund it. Okay, you have to fund it properly and make sure that that you're taking care of that, right? But it's designed with flexibility in mind. So.
The key takeaway of today is don't marry a killer.
Don't marry a killer. Marry a killer in business. Somebody's going to kill in business. Don't marry.
You can kill together. Just don't kill each other.
So look, it's a key aspect of your overall financial house. One thing that we're going to tease for tomorrow, we're going to talk about build wealth.
I have one question for you, though.
Yeah.
What do you say to people who say, oh, I'm going to self-insure. I'm going to become so wealthy that I'm going to self-insure?
Well,
what do you say to that?
Sometimes the things people say communicates where they're at. So a lot of times, here's what she means by self-insure.
It means they're not wealthy, first of all. They're saying that.
Here's what she means by self-insure. Person will be like, oh, I want to have so much money, I don't need life insurance. Okay. Either means a couple of different things. One, they're probably not at that stage yet. And number two, they probably don't know or aren't having conversations with people at that stage. Here's what I mean by that. Rich people do not self-insure. Rich people don't get to a point where like, oh, I got so much money, I don't need life insurance. No. Just like how the majority of the wealth is in the hands of a small portion of people, same thing with insurance. A lot of insurance are on wealthy people. They have a massive amount of life insurance. Why do you think they're like, oh yeah, I'm worth a lot of money? Why would a person buy life insurance? They're already worth so much money. Very simple. If I have $1 million, right, that I'm going to insure myself with, I'm going to leave my family $1 million. And rich people didn't get rich by being stupid. They got rich by being good with money. So they got $1 million, and I was like, oh, you know what? I can leave this $1 million to my family, or I can take this $1 million and buy $15 million of life insurance. Which one would make more sense to the rich person? Should I just leave them $1 million, or should I leave them $15 million by taking this $1 million and buying $15 million of life insurance? You understand? This is very simple to a rich person. Like, yeah, I'm going to leave them $15 million, or I'm going to leave them $10 million and leave $5 million to Yale or Harvard or whichever school I went to. So there you go. I'm going to leave that money. I'm going to leave some money to charity. You understand? Wealthy people think in terms of how do I use leverage? How do I have something here and multiply it? That's how they're thinking. So also there's something called estate taxes. When you're rich in America and you die and you're worth above a certain amount, the government wants to take almost half of anything above that amount. They want to call it estate taxes. So rich people buy life insurance to pay their estate taxes when they die, so that a family doesn't have to liquidate the real estate, exit the portfolio, all that stuff to pay the estate taxes. So rich people don't self-insure. We have a lot of rich clients. Look, we got clients we're working on $50 million each. This is one of the things we're working on now. Think about that for a second. $50 million for each one of the person in the family. That's $100 million just between two people in one family. You understand? This is all. Some of these people are at very different levels, and so you got to get your mind thinking. I don't even like to tell people that, because sometimes they can't even confront that one family will buy $100 million of life insurance. Sometimes they can't even confront that number. So, but it's true. I mean, we've already started putting a bunch in place for them already, and then we're building it up to getting 50 million on each person. So just understand that these things exist. This is how wealthy people use it, and this is what they do. So
okay, so I want to tell you guys what your challenge is for today, and then you can talk about the what we're going to talk about tomorrow.
Yes.
You can introduce what we're going to talk about tomorrow. So, and then after that, we're going to announce our second $50 winner. Okay, so tonight your challenge is to request a life insurance quote. And this way you can get an idea of what are the options out there, what is the cost, and you can find out, have some numbers to think with, and you can take that step to put that building block piece in place. If you already have life insurance in place, that's great that you have coverage, but request a quote and you can get a comparison quote, because if you got a policy like a long time ago, there's a lot of new benefits. Just like living benefits has only been around for a few years. So if you have an older policy, it probably doesn't have living benefits.
Most people don't have living benefits.
Yeah, most people don't.
Most of you don't have it on there.
Yeah,
just to keep it real with you.
So request a quote. You can get a comparison quote. We're happy to look at what you have also, if you have something in place. And you can request a quote at 6buildingblocks.com/quote. Rain will put that in the chat. 6buildingblocks.com/quote.
Yeah, so only request a quote if you guys actually want a quote done for you.
Yeah, okay, if you actually want a quote, you're actually interested in life insurance.
If you're like, I don't care about life insurance, nothing, don't request a quote, please.
And I'll tell you, tomorrow we're going to pick a $100 winner out of those who requested a quote. But don't request a quote if you're not actually interested
in having one. So okay, yeah. So somebody asked, is 3 policies too many to have? No, I have multiple policies. Your president of the United States got 6. He's got 6 freaking policies, man. I don't think anybody ever thought about that. The president has life insurance. Dude, he's the president of the United States. Yeah, he got a bunch of life insurance. So you understand. Yeah, you got a lot of them. You can have multiple policies.
I bet most presidents have life
I think
insurance.
all presidents have life insurance. That's a high risk. That's why they got so much protection. That's a high risky thing.
You want to cover that life.
So look, yeah, you can have multiple life insurance policies. You can have as many life insurance policies as the insurance company will issue you. So you can.
Oh, we're gonna put this on?
Yeah. So go to 6buildingblocks.com/quote. You can request a life insurance quote. There's a video on there you can watch that has Life Insurance 101 that gives you a little bit of an introduction, understand different types of life insurance. You can request a quote. We'll help customize a quote for you. Chelsea and I, we have a financial services agency. So we're licensed. We do business in 47 states. So one of the things we help people with is that. So that's something we can help you with. So somebody on our team will help you with understanding how to utilize, how you get the right kinds of protection for your family. Look, and living benefits, guys, is, and by the way, one thing we didn't say, I don't know if Chelsea said it or not, living benefits come at no additional cost on your policy. That's why I would never buy a life insurance policy on the term policy that didn't have living benefits. It comes at no additional cost to me. So I could have a policy that only pays when I die, or I can have a policy that pays when I die and pays if I got sick or hurt. one of the most expensive things you can do in America is get critically sick or chronically sick. It's not cheap. It's super expensive. And until it hits you, you have no reality. Maybe you do or don't, but a lot of people have no reality on what that cost actually is. So you making sure that's in place for you is key. Like there's a guy we know. He wanted us to help him with his finances. We talked to him about his finances. He had a life insurance policy in place. And I told him about living benefits, and he never went forward and did it because like, oh, I got something in place, blah blah. Everybody thinks they're good. Oh, I'm good. I got this in place. I got that in place. The guy suffered a stroke, right? He survived a stroke. Saw him this week. Survived a stroke, and he's back at work with a cane. He's back at work. He's got to go to work because he's got to provide for his family. At a very minimum, had he done the policy we told him to do, we would have been delivering a check to him for at least six figures, at least $100,000, probably more than that, to him, at least $100,000 to him that he didn't have to rush back to work, walking with a cane, trying to help customers at where he's working. It kills me to see that. This is somebody we talk to, but not everybody takes action on the things they need to do. The last thing I'm going to do is put my family in financial jeopardy if I die or get critically or chronically sick. That is the last thing I would do. What kind of man would I be if I had the knowledge and I did not take the action to make sure my family's taken care of? What kind of man would I be? Right? Chelsea's dad came on here. I told Chelsea's dad when I wanted to marry her that I would be committed to her, I'll be loyal to her, and I'll do everything I can to protect her, number one, and take care of her and our son. What kind of man would I be if I did not keep up that promise? So how am I going to ensure I keep that promise going if something were to happen to me? I got to use the tools. So a lot of times I challenge men on this because sometimes we have wacky ideas about life insurance and this stuff and that stuff. So look, that is one of the most important pieces of my financial plan is that because it makes sure it helps to ensure the financial survival of my family if anything were to happen to me. As men, you got to step up and do the same thing in your families, making sure your family's taken care of, handling these kinds of things. Sometimes women are more interested in life insurance than the guys are because they want to make sure that they're there. So, Kamisha, you can send us a message and then let's see why you're uninsurable because.
And also go back up because there was something else.
A question on here?
Is that an uninsurable?
Hashimoto's. I actually don't know what that is. So I couldn't get another one. It wasn't worth it as I have Hashimoto's. I don't know what Hashimoto's is, unfortunately. You can tell me a little bit about what kind of condition it is and maybe I can help you out on it.
And we can always look into it because there's a lot of times we've been able to get people approved when they haven't been able to get approved other places.
We had somebody approved with a brain tumor.
It was benign, but it was a brain tumor.
And I was like, I don't know, but we called and we talked to
benign means it wasn't cancerous.
So it's like, yeah, you got a brain tumor. She was so happy because she just thought I got a brain tumor, so there's hypothyroidism. I think we can. Do that.
So your best bet with all of your anyone with any health questions, just go ahead and request a quote, 6billionblocks.com/quote, and we can look into your specific case because it really is case specific. It depends. Sometimes there's some specific questions we can ask and we can get information and find out if we can get you covered.
We can get just about anybody approved. Sometimes, depending on the person's age or health condition, sometimes things cost more and sometimes it's not worth to do at that point. But otherwise, we can get so many things covered for people that can be helpful to them for different stuff they're trying to do.
But guys, GoFundMe is not an insurance plan. Okay, so choose life insurance so you don't have to go to GoFundMe. Yes. It kills me to see GoFundMe, especially it kills me to see anyone I've ever talked to that did not take action soon enough, and then something happens and they have to go on GoFundMe. Yeah. It breaks my heart, and it's so unnecessary.
Yeah, that happened to somebody we knew, and we had to help support their GoFundMe, and that really hurts. So because instead of the money we sent on GoFundMe, we could have literally been delivering a check for hundreds of thousands of dollars when that person got diagnosed with a terminal illness. And so that would have made a difference in their end stage of life, and how it's like, how that process is like.
Somebody may have to go into like a living facility. They may need a nurse to care for them. They may not be able to care for themselves, so they may have to go into a facility. And those are not cheap. Let me tell you, they're not cheap at all. And you need resources to be able to do that. And you don't want your loved one to go to some crappy, cheap, like none of them are cheap, but you don't want them in some crappy place that doesn't take good care of them. You want them like in the best place, and that you got to pay.
And that's something Chelsea and I are actually interested in buying, assisted living properties. So assisted living properties, nursing homes, we're very interested. So we're shopping for those. We'd like to find one that we can buy. Otherwise, we may just have to end up building one from the ground up. And it'll be very, very like high end. It'll be a nice kind of deal going on. So okay, let's do it. Let's do the next.
All right. And was there anything else that you wanted to say about tomorrow?
So look, you guys don't want to miss tomorrow. We're gonna cover build wealth. We're gonna talk about all kinds of different things, real estate. We're gonna talk about crypto, why having a good understanding of it, how to leverage different tools to accelerate your wealth. All types of real estate, multifamily, assisted living, different things you can do, even mobile homes. We're going to talk about those kinds of different things, all kinds of stuff that you can utilize to build and accelerate wealth. For today, go to 6buildingblocks.com/quote to request your free quote. You'll be entered to be one of our winners tomorrow.
And now, oh gosh, you moved it.
Oh, okay.
I had it at a certain place because, okay, so now we are going to announce our second $50 winner for today. And this is for an introduction video. Oh gosh, these are moving fast. An introduction video. And the winner is going to be, keep going, Danielle Byhan. Congratulations. And I believe you were like one of the very first people that did an introduction video. So great job in taking action quick, and great job on participating in the challenge. You can message us after the challenge and we'll get that cash money to you.
Awesome. So yeah,
congratulations.
Send me a DM. Congratulations. So Jay Hemphill asks, have you guys checked the NFTs down on Facebook, become a metaverse? Yeah, I really like the concept of NFTs. I think they're going to be used in a very creative way. People understand this is where the world's going towards. And companies are heavily invested in there. I've invested in some companies that create tools for a metaverse. They create all kinds of different things that you're going to be using in the metaverse. So I've already invested in some of those companies at early stages. They're different things. So I've put some money towards some of that because I find them interesting and I think they're cool. So we may touch on some of that. We won't get too complicated tomorrow. We're kind of stay high level on different things. But it's to give people a really good overall understanding of how to think about building wealth, what are enemies of their wealth, and how to look at where things are going in the future to utilize that. So someone says, yes, this has been the best 3 days. Glad you enjoy it. So we'll be back tomorrow. And somebody said they're looking at opening doing a property for kids with special needs, and my daughter's 18. Absolutely. It's a big need. People find needs that people have. And once you deliver on those needs, you'll be able to, that's one of the ways you create wealth, is delivering on needs that people have that's being underserved.
And let me tell you, these a lot of the assisted living facilities, even though they cost so much, they don't always provide the best care at all. The people don't get the best food. They don't have the best activities. And that's one thing we really want to improve on. We want to provide better food for people. We want them to go and actually improve the quality of their life, not just go there and like have to take their medicine and go to Target for an outing. So, I mean, those are like some of the outings that places do. They take a bus to Target and they give them like crap food and charge them like premium dollar for it. So we want to make it more affordable. And we also do want to make a profit, but we want to make it more affordable and improve the quality of life, because we've seen the importance of this care.
Yeah.
And we always look for where the need is. Like Martin said, where is there a need? Where can you improve conditions, and how can you provide value? And then that exchange is going to bring success to you.
All right. Awesome. Hey, thanks for watching, guys. Tomorrow, same time, 7 p.m. Eastern time. Make
same
sure to
time,
complete
same place.
the homework. For those of you interested in a free life insurance quote, you can go to 6buildingblocks.com/quote, and I will enter you for there tomorrow.
And you can also post in the group any takeaways, anything that you have implemented, learned, goals that you're working on. We want to hear from you and learn about you and see how we can support you.
Awesome. So we'll catch you guys tomorrow. Peace.
Bye.